Hey guys, first Friday. What a week. I mean, we had Halloween, we had Day of the Dead, we had a crazy market environment. We had the FOMC who really, they should just move that meeting to Halloween because boy, it scared everyone. So let's actually go through I'm going to share my screen here. We're going to go through just setting up the day and what's going on for context. And then I'm going to go through, let's see, I've got Albemarle, which I really want to talk about, Generac, which is somewhat related to Albemarle, and then Pypl, which you guys know I've been bearish on, and Expedia. I wanted to give updates on those since I've been very verbal about the two of them. Past performance is not indicative of future return. Past performance is not indicative of future returns. Sorry, I don't know how I forgot that. And then here we go. This is the indices, and you can see that they've been flip-flopping across flat. And there's really limited market leadership right now. I think that we're closing into the new year. We really only have now 2 weeks until Thanksgiving. And then after that, you get liquidity dying out of this market. It's been such a rough year that I could see people closing it out quickly to try to just reset for next year. Here's what the market looks like. You've got Tesla down 4% because of the stupidest, for lack of a better word, this has been fake news week, okay? Fake news, out of context news, or complete BS. You know, I mean, I don't know if somebody's on holiday that usually does QC at all of these news organizations, but this week has been particularly bad, but it always is like that in earnings season, so I should know better. But Tesla's down because of this conjecture or discussion that the China number is weak because of waning demand. Well, and because of the pricing that they said that they were going to take pricing down. Well, that's not true. Okay. First of all, pricing is this month. And second of all, you know, a lot of people withheld their purchases last month knowing that the price was coming down. So it's just a load of BS as per usual. This stock is massively undervalued. I'm going to put a limit order in. And if it hits, I'm going to be thrilled because I think this market's going to be very, very volatile until we close it out for the year. And if I could get some more Tesla at a crazy good price, I'll be stoked because I am definitely underweight. Tesla, really one of the only big cat names that's continuing to show extremely strong top line growth, extremely strong EBIT and earnings growth, EBITDA and earnings growth. And that's just coming from the fact that he's executing like a rock star despite all this other crazy noise that's going on. This is the only stock that currently within mega cap trades above its growth rate, PE to growth, you know, greater, like less than 1, it's still actually growing. Almost everybody else had to take a huge nosedive or trades at a premium to peg, essentially over 1, peg over 1, so to speak. All right, so that's my 2 cents on Tesla. I think for the next quarter, you just try to get it until it becomes crystal freaking clear what's actually going on. The only caveat to that is, and I will do a separate episode as per suggestion on the FOMC, the Fed, and a couple of different topics as we finally start to move out of earnings season. Okay, economic data next week. We do have CPI coming out on Thursday, so it's going to be a nail biter. Also, we have the midterms that are coming out on Tuesday. That's going to cause all kinds of crazy in this marketplace. There's nothing that can be done about that. So you just want to make sure you have cash and you want to have some names in your head that you know you want for the long term. Alternatively, check out my very dear friend and colleague, Richard. He has his morning show and they are day traders, rock stars. And I really think he's super talented. So if that's more your style, absolutely check him out. Now, next week's earnings tapered down significantly, thank God, because I have so much catch up to do. Sorry, this was this week's. Mosaic and Disney, we have in the middle of the week. As you know, I've been all over that. Senseonics also on Tuesday. You know, I'd rather you have the stock than the options on this because I do think that no matter what happens, this is actually a company that you want to own for the patents, for the fact that they're fixing one by one all of the things that are not perfect. But you know what? It is still in the small cap world, so just be aware. We've got Berkshire Hathaway on Saturday. If people want to do the big stupid on Berkshire, if this thing dips back below 280, that is where he buys his own stock back. And so just pay attention to Berkshire in case you get another stupid run downwards on it. You also have Occidental Petroleum, Oxy, a big holding of Berkshire, but also it's going to report just fine. It is what it is. And that's on Wednesday. And then it almost more or less takes this out, except for retail, which then reports later, because a lot of times they try to incorporate that week of Thanksgiving into their numbers. All right. I wanted to talk to you briefly about earnings, and that is that I've listened to 200. I finally hit it this morning. 200 calls. They're about over 300 in the S&P 500 that have already reported. And I'm still seeing 59% of companies have top line growth, revenue growth, and earnings growth. Okay. I don't care about these crazy estimates that the analysts have in. I'm really trying to get a picture of what's going on in the economy, and corporates are in really good shape. I'm going to give you one other slide about that at the very end of this episode, just to show you why it is that corporate America is so much stronger and really going into this economic oddity, if you call it, in the best possible shape. I'm going to show it through one of the stronger companies within the S&P 500. It's a little bit expensive, but I will show you precisely what I'm seeing as relates to the debt component, which is really what it is about with business. How do you fund it? Okay, let's talk about Albemarle for a second. I've been bullish Albemarle. It didn't actually run up the way it should have because it reported yesterday into the nasty of the FOMC meeting, essentially. And this stock is legitimately massively undervalued at this point. I bought some this morning. This market is really hesitant, so I'll probably buy more. I'm just buying the stock because right now there's so much vol in this, and rightfully so, because it is massively undervalued. Okay. Again, the story, I do have old videos on this from like January, February. I think probably sometime in the summer, they really talked about the fact that, or spring, they talked about the fact that they stopped using any kind of price cap on and just let lithium. So Albemarle, sorry, let me start from the beginning and give you the story. So Albemarle sells lithium and bromine, but it's really lithium, okay? Because even though the margins are really great right now, the growth is fantastic on bromine, it really is all about lithium. They're the only US producer of lithium, even though a bunch of what they produce is in China, okay? So that, they're just, and then globally, there just aren't that many lithium producers, period. The market is crazy tight. I'm going to show that to you. And last year, I wasn't at Albemarle mostly because they had already locked in prices for the year. They finally got out of that in the first quarter, and now we're seeing the benefit of it. And it's just printing money. Like I always say that about the oil companies, but lithium prints money. And you can even hear that echoed. It's not even just me that says it. It's actually Elon that says it all the time. Every single time on his earnings call, he laments this whole lithium situation. And it's even threatened to get into lithium at some point, but I think he's got to absorb Twitter. So we've got revenue up 150%, okay? Operating profits, because you get the economy of scales, up 500%. EBITDA is up something like 450. So even after you take out everything that's going on in the weirdest of ways, you still have crazy, crazy returns. And then you've got earnings per share going from negative $3.36, which is why I couldn't do it last year because of those spot price issues, to $7.61. It's a joke, okay? I don't even know another way to say it. It's a joke. And the reason it's a joke is because if you look at the market cap, you'll realize, hold on, let me just double check. I should have written it on the slide. The market cap of Albemarle, it's like, this thing is so cheap right now. The market cap's 32 billion. They're going to do in EBITDA, they're going to do $1 billion. So call it 5 billion next year. It trades at 6 times. It trades at, you know, it's a joke. It's like it trades at, there's some debt in there. So call it like somewhere between 7 and 8 times enterprise value to EBITDA. This is a joke. It's so cheap, okay? The thing is growing top line at 150%, bottom line at 700%. You need to just own this thing. I mean, it's crazy. All right, let me show you what I saw that I think it's all about lithium is really what it comes down to. It's expected, lithium sales are expected to grow. EBITDA is expected to grow, finalize the year at about 550%. Volume growth is expected to be 20 to 30% for new capacity. But let me show you what is needed. This is the gap. This is what's currently being created, 200 tons. They need another 400 kilotons to actually fill demand. And all that's going to come online is another 200 kilotons. It's like not, and the reason that this is happening is because Europe's a hot mess. They actually need the batteries to store the movement into, natural gas, let alone anything else. Because if you want to go to electric vehicles, you are going to have to solve the storage problem. Alternatively, if you're going to go, and not the least of which is you're going to have to put batteries in all these cars. So all of that stuff is what is driving this demand. We're just not even going to make enough next year is what's going on. So own Albemarle, ticker ALB. Right here, it's cheap. This market tries to sell it. Just buy it. Buy the stock. Don't get too cute with the options. All right. Enough on that. I've waxed philosophy there. Generac. GNRC is the ticker. Sorry, I didn't put it on here. Here's the thing with Generac. It's going to have 2 crap quarters and then we're off to the races. And this was something I was reading the Reddit boards, and I've been following this since it entered the S&P, I think 2 or 3 quarters ago. Its valuation is still pretty expensive at these levels. They make, they basically make these batteries that I'm talking about that you're going to basically store the energy in. Power generation is really what they do. Also, if you want power generation in just your own home so that you can have backup generation, that's what this company does. They have a global footprint. So Europe is really scared about that. And the growth in this power generation business is being driven by the utilities companies, by the digital centers, the hyperscalers. Essentially, they want to have backup generations. They don't have a server outage. So there's a million things that are actually driving this. But fair and square, he ate it this quarter. Okay. You had about 15, call it 10% top line growth on the quarter. But then his selling and service cost went out the roof. It was a double, which drove his operating margins down, which drove his earnings all the way down. Net income was only call it 40%, 35% of what it was last year. What happened was he couldn't get people to install the generators. So inventory backed up and they had to stop selling because there was no storage for it. And, basically the way these things are cash flowed, the person that installs it has to front the capital to buy the inventory, and they were maxed out. So they couldn't sell through. And so they thought, and it's always been the case, this has been a massively growing company. They thought they could get people trained up. They've never had an issue where the installation piece was the part that was a disaster. If you listen to call, that's what they'll talk about the most on. And the reason I'm saying this isn't a 1 quarter fix is because we're getting into winter. So because winter is coming, there are some things you just can't do in the winter, like install stuff really, really fast. If there's a snowstorm, you do nothing. If there's snow on where you need to actually install, you do nothing. So that's what's happening with Generac. But I think when we come around the corner, then it'll be interesting. But between then and now, we've got some ugly quarters. If it creates an opportunity, ticker GNRC, definitely put it on your screen. Here's the balance sheet. You can see it very clearly on inventory, up significantly. Usually inventory for them is flat to slightly down because they're running out of product at all times, just trying to get things re-upped, but not this time. Okay. Now PayPal. You guys know I've been short PayPal. And in fact, even just a few days ago, I have this little short clip that talks about activist investors, and I'm really talking about Elliott Management here with PayPal. This was neither a good nor a bad quarter, but if I had to pick a side, I would pick slightly bad. And it's really hidden in the numbers. It's so hidden. So let me show you what happened. Revenue up 10%, operating income compressed to 7.1%. It was 8%, by the way, earlier this year. So we are continuing to get those declining operating income situations here, but net income looks great, up 22%. And it's because of this line item that is below the line. What is other income, you might ask? Well, I looked it up just because I was like, what? This is totally unexpected. Other income is this variable entity, VIE structure that they have that essentially is loan servicing revenue for Pypl, okay? It goes up, it goes down. It's an awkward thing for like, they're not a loan servicer. I don't know another way to say it. This absolutely, for all the things they want to talk about, that credit losses are great, whatever, they're not a bank. Okay, they don't have a history of doing this business. So this is really something else, especially given that they still trade at a valuation that's higher than Discover and some of the other companies out there that actually do this business. Okay, this is just strange. That stuff should not be, that should be sold off. Let's just call it what it is. Now, the other thing I think is going massively unnoticed is this transaction and credit losses. This is up 37%. And I have said for a while, I don't know about this Pypl. It really sounds like they are becoming the, and look, banking the unbanked or the underbanked, it's a great business. I'm really excited for them to do it because desperately those services are needed. But credit losses, up 37%. This isn't you reserving more for credit losses. This is losses, okay? So I'm just like, all right, interesting. So that is why, as we move into next year and we start to see employment growth, hopefully, or else they're never going to taper, subside a bit, I am still not ready to buy PayPal here. I'm just going to say it like it is. So that's PayPal in a nutshell. That's where I sit with it. Good luck to those of you who think it's massively cheap for whatever reason. Now let's go to Expedia, okay? I was so upset when I looked at the pre-market, the aftermarket last night and saw people selling down my Expedia because that's ridiculous. I don't know another way to say it. Revenue growth up 22%, operating income up 42%. Okay, net income up only 28%, has to do with some fair and square. They do have some debt extinguishment. They do have a lot of like below the line stuff that's happening because this is a reorg. But that's why we're looking at operating income. EBITDA is not going to matter as much because the DNA really will start taking, well, I mean, you could look at EBITDA, but it's going to look just as good as this, quite frankly. The point is, this was a stellar quarter. It really proves that this man has the ship going in the right direction. And I will say it over and over again. Travel is doing great. And by the way, travel is doing great despite the fact that Asia hasn't recovered. So this is coming off of the US and Europe, my friends. If Asia actually opens up, if China decides to calm down, which it's already shown in a couple of different reports that people have already discussed, it's shown a desire to potentially open up its economy towards the end of the year. Remember, we still have Chinese New Year's in January, February. I have to double check the dates because my mom will want to see me then. Anyways, you know, if China opens up, then travel, the one area that has not been good is Asia. Travel is going to do great. So that is what it is. Final thing, I almost feel like I should save it. This came from Equinox, which you should always keep on your radar screen if it gets brutalized for no reason. I feel sad that I missed it, quite frankly, because it actually did trade $100 cheaper. But Equinox is a REIT that basically does data centers. So I do listen to their call extensively to understand what's going on in all of the cloud-based companies, quite frankly. And what I loved was this slide. Whoever made this slide at Equinox, high five. I really appreciate you. And I really wanted to show this because this is what the debt profile looks like for a lot of companies. This is why I keep saying that what we're actually going to start seeing and why companies are in such good shape is because even if they start paying back debt, even if rates go up, it doesn't impact a lot of corporate America. Let me show you what I'm seeing. With rates as low as they were, this is Equinox. They basically have no debt due until 2024. And then it's the world's smallest amount of debt. And I want to show you this as well, right? Sorry, I moved all these. So leverage really low. Okay, hold on. This is what we need to see. Their blended borrowing rate is less than 2%, okay? This is a real thing that exists across a lot of large cap land for any company that had a beautiful, pristine, happy balance sheet like Equinox, but also like so much of large cap. I really don't know another way to say it. The only caveats to that are the folks that are paying down their debt, which is essentially oil and gas and some of the other kind of, companies out there of that ilk. But guess what? Those guys are printing money. So that is what it is. So they're paying it down fast. 8.6 years average maturity. So you can just see that in the next 5 years, they don't barely owe any money. And then most of it is fixed rate debt. That's what I'm looking at. That's why I keep arguing that we could have a European nasty, but a US just fine. And with that, I will stop sharing. I know this went a little longer than normal. Finally getting over my cold, so hopefully these won't be so long. How are you doing, Dave?
Hey, great, man. So I think what you're saying is, it seems to me that lithium play as a very good long-term investment.
Yeah, lithium and Albemarle, which is the best US company for you to choose. There's really no other company that makes lithium. There's a couple of people that try to pretend like they do. Like I think Air Products might be investigating something down in California, and they talked about it. And I don't think they even realized that Albemarle is the biggest producer. That's how new it is on their radar screen. But they're lithium is so underproduced right now globally, let alone in the United States, where we desperately need more lithium production. The thing to note about Albemarle is that even though it is a US company in the S&P 500, based in Nevada, they absolutely are producing most of their lithium, I think like 40% or something like that in China. And then they do also produce in Latin America. So it's not like you're only getting US exposure to lithium with Albemarle, you're really getting global exposure.
Do they own the mines, or
It's this really weird process. I really encourage you to take a look at because it's going to be really fun to be in lithium. Definitely buy the stock. I wouldn't even play with the options. I would buy enough stock and then use the options to hedge, quite frankly, because of how much vol is in those options, especially the day after or the couple days after earnings. But yeah, essentially the answer is yes, but lithium production is a weird process. You need water for it. If you go on Google, you can see what it actually looks like, and then it'll make perfect sense why it's based in Nevada and what actually needs to happen for us to increase production.
Got it. Okay, thank you. China, you mentioned China. Are they getting close to opening up? You did a report, I think, on MGM that showed they were starting to visit Macau. Is that right?
They're calling it dynamic COVID policy. It's still pretty aggressive because if anyone catches COVID, they lock it down. But the fact that they're experimenting in Macau with that policy means that they'll probably roll out. And this is so China. Let me tell you, there is nothing more Chinese than picking a border city and rolling out different policies there first. If we're confused at all about that, just look up Special Economic Zone China 2000 to 2010. That's how China rolls. So 100% they're doing what they call a dynamic zero COVID policy in Macau to try to get, just to see what happens and how often they have to lock it down and close it. That means that there is going to be travel to Macau. Additionally, Marriott, which the market clobbered, but had an amazing earnings report, as did Hilton, by the way. Both of those are super cheap right now. But they said that every single time a city opens up, the pent-up demand for travel in China is crazy. So they end up with numbers that are fantastic. So even within China domestically, they are trying to open up travel best they can. Now, the real key thing, I think that this next quarter, you'll start to hear some talk about it, but because we go into Chinese New Year, my suspicion is that you probably get very unique news flow related to travel in China around Chinese New Year's. I still am sniffing around to see if my friends that are Chinese are going to go back to China because they haven't been home for 2 years, quite frankly, and they miss their families. We are a very family-oriented culture after all. Ever since COVID started, no Chinese person has been really allowed to go back in because they really don't want to deal with the disease control associated with the massive migrations that happened during that period of time. Additionally, that means that a lot of people that work in China haven't been able to go to the nations that they are their hometowns. So it affects Philippines, it affects, pretty much all of Southeast Asia, quite frankly. So we'll start to hear news probably in December, the degree to which people are allowed to travel around Asia. And then after that, they'll probably see a little bit more opening up. So you really have maybe a month or so to kind of see what's up.
Got it. Okay, so lithium and gambling.
Lithium and gambling. Exactly. It's a very explosive combination.
Okay, have a nice
High
weekend.
risk. High risk personally, but actually given the valuations, I feel pretty good about both of these.
Got it. Thank you very much.
All right, cool. We'll end it here. Make sure that you guys have cash going into the next few weeks, guys. Do not overinvest yourself. And then everybody stay healthy because that flu is going around. Bye.